Okay. All right. So today we're going to leave everything that we know about inventory behind. Okay. Because today and the next three chapters are all going to be new concepts. Okay. So, um, yeah. So chapter 9 is going to be talking about cash. Now, cash is very important, especially because it's going to tie in with the next chapter, which is chapter 10, when we actually start involving, well, what happens when we have receivables and what happens when debt becomes uncollectible. And then lastly, we also have to talk about what happens when we need to make adjustments to our bank accounts. So that's all chapter 10. So let's go ahead and focus on chapter 9 when we're dealing with cash. Okay, cash, credit cards, and whatever it is that you need to utilize as a form of payment. Now, of course, we all know cash is by far the most easiest form of ways that we can make a purchase for goods or services, right? It's in the United States. This is our formal common you know item, thing that we use in order to exchange for a good or service, right? I'm so sorry. We use the US dollar. Okay? Pretty straightforward, right? It is what we use to exchange for goods and services. So anything that we have that is on sale, right? Usually it's measured in terms of dollars. So same thing here. It's the most easiest form and readily available type of currency, right? Yes, for right now, we also have other forms of currency, such as we have a check, obviously, we have credit cards, and I believe um, it's not really fast growing or anything, but I'm hearing that cryptocurrency is also becoming a form of currency that we are trading right now within the U.S. If you've heard the news, a lot of people are going into purchasing cryptocurrency and exchanging it for particular things. So right now, cryptocurrency is in the works, still in the works. But also, we can also take a look at also other currencies such as foreign currency, right? But of course, in the United States, we widely accept only U.S. dollars, right? You have to go exchange it in order for you to actually purchase anything here in America. All right. Now, of course, when we look at writing a check, it's pretty standard and straightforward, all right? Now, for me, I haven't written a check in almost years from now, okay? Because we have a lot more easier and convenient ways to transfer money, right? Now we have a vast, widely used for Zelle, Cash App. We even use things like Venmo, right? Where you can just send money in an instant. It's the easiest way to transfer money. But of course, one thing that businesses should and always do is the one thing about a check is it is a perfect way to have some kind of paper trail, right? I guess if you look really deep down, the most common form of a check that you would normally see right now is your paycheck, okay? But yes, it is true. Like, yes, you can get a company credit card and it would work just fine. However, like I said, checks are usually going to be for more primarily use for businesses because it is, again, it's an easy way to keep some kind of paper trail that a transaction has happened. Now, here's what a check should normally look like, right? It's got your bank account, your name, whoever the company is, right? If you're using a company check, it should have the company's name on there, their address, and so on and so forth. There are 5 things that are mandatory to validate a check. All right? First off is you need to know who you're sending the check to. Second of all, you need to have the date to ensure that this is when the cash is available. Third is the amount. If you don't have an amount on there, right, and you can't, if you've learned this from going to the bank and actually writing a check for your first time, they normally say to you that you cannot write a blank check, because if you use two different pen colors, obviously that's a sign of fraud. Okay, so they would not accept it if you have the amount written in blue and then everything else is written in black. No, but you can, if it's necessary, give a blank check, then yes. But yes, you need to have the amount on there. And then another thing too is you need to have the account number. Now, usually when you get your checks, they're already printed there on there for you. Okay, so there's no much worry to that. But when you're using QuickBooks, you're not going to have preset checks that have your account number on there. What happens is when you print your checks out, it prints that information on the check for you. And then, of course, last but not least, you need to have a valid signature. If you don't have a signature, that check you can't use it. If you don't have the date, you can maybe use it. Again, the amount is important because you need to know how much you're transferring the money to. So those 5 components is what makes up a check and makes it valid. Okay. So like I said, most cases, most businesses would actually use either a business credit card or a business check, because like I said, it is the best way to formalize some kind of paper trail, right? Every check has a check number, and at least it's the easiest way to be able to see if the check has cleared, and so on and so forth, right? Plus the dangers of having online, right? You can send money to other people. People can hack your account and start, sending money all left and right. So there's a few reasons why checks are still used today for businesses. Okay, it's a secure way. Now, of course, we talked about how credit cards are becoming more convenient and more available to use because, it's the easiest form of way to transfer money, right? Especially because it's just like a plastic card. You could go anywhere, you swipe, or now they have chips on them. So if you need to make a business transaction, it's instant and you don't need to wait till you have your check cleared. For most cases, credit cards, right, you charge it and you pay back, right? And in this case, if we're looking at if we own the credit card, then we have to pay, obviously, interest off of anything that we owe. And it becomes a liability to us. But when a customer uses a credit card, we still also have to pay a percentage for the debt collector to actually be, because they're responsible to collect the debt for us, right? The customer is using them to make a cash advance to pay us. So therefore, we also have to pay a percentage. It could be a percentage. It could be a flat rate, depending on what your agreement is with each individual credit card company, right? Visa is going to be different than Discover and MasterCard, et cetera, et cetera. So every single company that you go for, and you tell them, hey, I accept this and this and this, right? Usually the most common ones are Visa and MasterCard. But yes, they do charge a percentage based on either total sales, or it could be a flat rate that you have to pay every month. Whatever the agreement terms is, so instead of getting the full amount of sales that goes directly to your bank account, you actually get an additional card charge for that because, again, you're using them as a third-party vendor to retrieve the money for you. Or in this case, the customer uses them to pay in advance, and they're responsible to pay the credit card company back. So there's a lot of rules and logistics when it comes on to either us using a credit card or if we accept credit card transactions. So yes. The easiest way is obviously to go through the cash way, saying it cash only. But then again, you might lose a lot of customers because a lot of customers nowadays, right, with the vast majority of the idea that having a credit card and owing and making the purchases, yeah. Anyways, so again, credit card companies, they charge us, they can charge annual fees, they can charge interest, and of course, especially when it comes to specific credit cards, right? Sometimes it's even hard to even get a credit card because you need to have a good credit score. So remember, if you are planning to become a business owner, right, and you submit to yourself as a small business or a whatever you want to call it, a sole proprietor, most likely, if you are eligible to be able to receive the business license, most likely the first thing that you're going to do is they're going to offer you to open up a business credit card. So usually that's always offered. Okay? So now, with that all being said, those are the main ways that we actually pay for things. But one thing I want to talk about is what happens when you don't have those things available, or for example, only the owner has full, what do you call it? They have full access, or they're the card holder. So that means they have to make the purchases themselves. So we're going to talk about what a petty cash fund does. Usually a petty cash fund is for any minor business expense that anybody can go ahead and do. So most common ones that you would normally see is, instead of having a petty cash fund, is we have reimbursement checks or reimbursement receipts. So this is the same idea here as well. Someone is going to be responsible to guard this petty cash fund. Now, this is just in case, let's say, a small business, right? We run out of copy paper. Someone's got to go down to Office Depot and grab a box of printer paper because we need it in order to, print stuff for the customers, whatever it is that you need, right? Or let's say you have a business meeting and you need to go run down and get some coffee, get some snacks, etc., etc. Those are going to be considered small, minor business expenses. Instead of relying on the person who's in charge of accounts payable, right? Instead of asking them, hey, can you order me some of this, right? That's going to take forever. Where these minor business expenses, right? They're just for convenient charges. So like I said, maybe you needed to do this and do that, right? So usually what happens is it's a typical lock box, and it has obviously cash in it. Okay. So and then another key feature that you need to do is that once you establish that you have some sort of lockbox available, you need to create a ledger account. Okay. Now, there's two types of ledgers accounts. One is to keep track of who takes the money in and out from the petty cash box. And then the other one is on your actual general ledger itself, just so then you know that you should have this, form of cash as an available option for you. So it's good to make sure that you have that kind of, that you do create a ledger account in your general ledger. Okay. And again, it's usually for minor expenses. Now, oftentimes, like I've mentioned earlier, right? The best way to be able to do this is to actually have, your employees or whoever is working there, they go out, they use their personal credit card, and you get reimbursed. that is the best way to be able to use this, because oftentimes petty cash funds, right? A lot of people, they're not truthful and they steal from the petty cash fund, especially if you're planning to have set aside like $1,000 for any minor business expenses that may occur. So oftentimes the best way to go around this is to have the employee go run, pay on their personal credit card, and then bring the receipt up to the boss, and the boss would write them either a reimbursement check or give them the cash for it. You can also do where the boss, right? If they don't have cash available, they can lend you permission to use their business credit card. But, obviously that's also something that should not be done, just because, again, in order to validate your business transaction, you have to sign for it. And you can't just have anybody sign for the business credit card. But usually that happens, especially if the owner's name is not on the business credit card and it's just solemnly just the business credit card, and it's available to anyone that can use it, then yes, then that's going to be a separate thing. But most often cases that when you do have a business credit card, or if you are a sole proprietor, your name's on there. Because again, you and the business are one. So that's also another option to, instead of having a petty cash fund. But again, yes. But oftentimes, if the petty cash fund can even hold on to the business credit card itself, as long as it's locked away, right? And someone is there to be assigned to record who's taking the business credit card and why are you taking the business credit card for. And usually what happens is you need to attach proof, which is your cash, either your cash receipts or your receipt that you get for that transaction. So then when you do the accounting behind the scenes, or when the accountant looks into the petty cash fund and ensures that a transaction has happened, that it matches their books as well. So that is what a petty cash fund is. Now, a common one, I would say, for a good example is if you don't have a petty cash fund, the best and closest example I can give is a cash register. You need cash in your cash register. And when you're doing a transaction, right, the number of the amount of cash that you started out with needs to be equal to the amount of cash that you have at the end of the day. So that is going to be a good, perfect example of a petty cash fund, is that you're actually using it to exchange money for a sale. But at the end of the day, the money is still going to be equal from where you began to what you ended with. Same thing if you have a petty cash fund. Your box, if you set $1,000 in your petty cash fund and people are taking money out of it, your cash box must still reflect the equal total of cash receipts to the remaining money in the cash box must be equal to what you began with. And that's what I want to teach you in this section here. Because oftentimes when you are a small business, you're going to have either or. All right. So with this, we're going to talk about how to establish a petty cash fund. Pretty straightforward. As we mentioned before, we need to have at least those two physical things to even begin to have a cash fund. You need to have a lockbox to safeguard your cash. You need someone to have a manager to be responsible for the petty cash fund. And then lastly, you need to create a ledger account for it. So same thing here. So you need to assign a manager to be in charge of it. And again, yes. So in order to establish it, you have to actually try to figure out what kind of minor business expenses could possibly incur when you're running your business. So again, for example, I'm sorry, I'm trying to think. So for example, right, I'm going to use PETA for example. PETA, right? We are constantly printing out test results for the testing center. So we need to have a huge stack of paper on the side, right? On the admin side, we need to have paper so we can print out invoices, print out, print out our sales forms, right? Print out our copies of our intake forms for people to sign up and record their information. We constantly need paper. Now, of course, it's more beneficial and practical if you have someone who's in charge of the accounts payable to go ahead and make a purchase order to buy a box full of paper. But again, when you're constantly printing, and you're running out of paper, it's not ideal to go ahead and buy 20 boxes of paper and just say, hey, right? Let's go ahead and just use it all, the paper all at once. No, usually how it is that we have other expenses that need to go that are a priority, right? Such as paying your employees, such as paying for these expenses. So when the office runs out of paper, someone has to go to Office Max and go buy a couple reams of paper and then tell the person who's in charge of accounts payable to order more paper. Now, in that case, if that's the idea here, that you will have encountered some of those business expenses, those minor business expenses, or if you hold a staff meeting every end of the month, then let's just say for these kind of things, you need to establish a petty cash fund. And again, so in this case, I'm going to say, I'm a small business. I need those. I need to have those, the cash readily available to make those minor business expenses. So I'm going to establish it to be set at $500. Now, in order to do that, of course, we're going to journalize it just as is, right? Because we have to take our own money from our bank account and put it into our petty cash fund. So that's exactly what we're doing here. We're essentially dumping money into our petty cash fund. Now, you can, if it's beneficial for you, to dump all your chump change into your petty cash fund. But essentially, it's not meant to collect your chump change. It's meant for you to actually utilize to, for those minor business expenses. Because your chump changes are going to total up a value. Now, you can dump your chump change in there just so that you don't have to go to the bank and pull out money. But oftentimes what happens is that the best way to actually validate a transaction that's happened is to write a check to the person who is the manager of the petty cash fund. They're going to cash it out and deposit it right into the petty cash fund. Now, of course, that's kind of stupid, right? Why doesn't the owner just go to the bank and withdraw money and then just place it into the petty cash fund? Yes, you can do that, but then again, it's all about the responsibility of who is actually going to record that transaction has happened. What possible form of, proof that you're actually withdrawing money from the bank and actually dumping it into your petty cash fund. The owner can withdraw whatever money they want to, whether they want to take some money and then put some into the petty cash fund. There's no real proof or something that's going on, or real proof that you are able to record that. So again, the best way to do that is to write a check to whoever the manager of the petty cash fund is. They cash it out and they place it into the petty cash fund. Okay. And of course, this is what we do because we have a ledger account. We have an account called petty cash fund or petty cash. We're going to debit our petty cash because we're increasing our money, but we're also decreasing our original, which is we're putting our money into from our checking into the petty cash fund. Okay. Now, when we are looking at trying to increase our petty cash fund, so maybe we had some minor expenses and we saw that, man, this $500 is not enough for our business expenses, right? Sometimes we got to go buy printer ink, or another case, we need to go buy some pens so we can, have our people, any customer come in, we have them write down their credentials, whatever it is, right? So we decided, like, well, in order to increase a petty cash fund, you need to establish, well, how much more are you willing or needing that's necessary to increase. So in order to increase our petty cash fund, we're going to essentially do the same thing. We're going to write a check for the difference, or the amount that you want to increase it to, into our petty cash fund. So right now my petty cash fund is currently outstanding $500. Because I want to increase it by $250, therefore my total petty cash should reflect $750. Okay? Now, you only use the journal if you want to establish, increase, or decrease, or close out your petty cash fund. Okay? Now, if you want to decrease it, vice versa, you just pull the money out from your petty cash fund, so that it be flipped in reverse, right? Your petty cash fund will be credited and your checking would be debited. Okay? Now, for those, that's just in case those minor expenses. It's just the amount that you have originally in your petty cash fund does not fulfill all the business expenses. So again, now, this is where I'm going to talk to you guys about, well, how do you even spend the petty cash fund? So we talked about earlier, right? You only use the general ledger to actually either establish, increase, decrease, or close out your petty cash fund. But in this case, my question is, well, if I can only use my journal to do those kind of things, then how do I actually spend my petty cash fund? Well, it's pretty straightforward. So we talked about, remember when I said that you need two ledgers, right? You need one that goes to your actual general journal, and you need one for the petty cash manager. That person is going to, at that ledger, is going to record who takes the money, and did they come back with a receipt and with the exact change. Okay, and then obviously, that's the main point, is that person is responsible to record who takes the money out, how much did they take out, and did they return with a receipt and exact change. Okay, now with that being said, therefore, this ledger is not ever going to be reported until you replenish the petty cash fund. Okay, so as you spend the money, right, we have a separate ledger recording all these transactions, right? You have all the receipts. So then once you keep collecting all the total receipts, what you're going to notice is that, again, your petty cash fund, right now, it's $750. If you have someone that's going in and out and buying all these things, at the end of the day, at the end of every single transaction, when all the receipts are there, your total receipts plus whatever remaining money is left in the box should total up to the exact amount that you started your petty cash with. Okay, and so we never ever going to journalize until we replenish the petty cash fund. Okay, so again, we are not going to record the transaction, and we're not taking it directly out of the petty cash fund. All right, so then how do we record when we replenish? This is exactly how you're recorded. You're going to gather up all your total receipts, right? And you're going to place them in the transaction, right? I bought office supplies. I had to pay for delivery. I had a business supplies expense. I had to pay for party supplies because we decided to throw a party. I also had to pay coffee for the meeting. Things like that. So you're going to itemize all your expenses. So here, office supplies, delivery fee, business supplies expense. You're going to list them all out. And what you're going to do is you're going to write another check to the person who's in charge of the petty cash fund. And they're going to essentially what you're doing is you're trading all these receipts for cash. And what you're going to do is that's how you record this into your journal because I'm itemizing all of my lists here and I'm paying for them with another check. So then at the end of the day, when the person, when the petty cash manager decides to replenish the petty cash fund, so essentially when we started, right, we had $750 cash in there. Then as the day went by, all these expenses were taken out. So now the cash box is full of receipts and X amount of cash left over. So essentially what happens is that this petty cash fund, when we go and replenish it, we're taking all those receipts, we're itemizing them and journalizing them, and we're reimbursing or paying back the petty cash fund. So then the next day happens, you have now $750 cash readily available to make more business expenses. All right? So is this clear? Yes, no, maybe so? I don't know. So, again, you don't journalize the expense as it happens. You journalize it when you need to replenish your petty cash fund. Reimburse the petty cash fund. And notice this, none of my accounts here have petty cash as my account. So whatever amount that you establish your petty cash fund, that means at the end of every single day, whatever it is, the value of that petty cash fund should never change. So it's exactly identical to a cash register, right? If you start out with $1,000 cash in your cash register, at the end of the day, after all of your receipts and your transactions and exchanging your money, you should have $1,000 at the end of the day. Okay? Now, of course, in order to close out, let's say you don't even need a petty cash fund anymore. Again, in order to close it out, you're going to get rid of it. You're going to zero it out for whatever amount that it is. You can also apply this for decreasing. Let's say maybe you notice that after you've placed in there $750, all of a sudden your business expenses are shrinking because now you've already have all the supplies, so you can reuse them. So you need to decrease them. In this case, I don't need the petty cash fund anymore. I realize I got a business credit card now, so I don't need to have loose change or loose money laying around and having to someone to have to be responsible for it. So I'm going to close it out by crediting my petty cash fund. I'm zeroing it out. I'm emptying out that entire account. And of course, I'm not going to pocket it in my pocket. I'm going to take it back to my bank because essentially it's money that I can use for other expenses, right? So I'm going to place it back into my checking account. And that's how you do it, right? Now, of course, let's look at reality, okay? A lot of things can happen, especially when you're dealing with a shortage or overage when it comes to a petty cash fund, all right? Oftentimes, either or, not always, the person who's the manager of the petty cash fund, right, they don't record very well. Or, for example, oftentimes is it's the end of the day. They decided to take $20 so they can buy coffee in the morning before they get to work. So they take it at the end of the day and they forget to put the receipt back into the lockbox, or they forgot to record it, right? It happens. Or if anything too, like they forget to put the business credit card back into its original place. It happens. And that's where overages and shortages can happen, because whoever's responsible for the petty cash fund, they don't do a good job managing the money very well. Or vice versa, the owner can just be like, okay, I need $20 for gas. I'm going to go ahead and do my petty cash. It's my money anyway. Take $20 and I'm going to go buy gas with it. Right? That's just hypothetical. So oftentimes, right, obviously the owner doesn't need to record that. It's his money. So that's a reason why we would have shortages or overages. Now again, for if we use the concept where we are a grocery store, we have a cash register, a lot of your customers, right? Oh, you can keep the change. When they say you could keep the change, essentially you're not taking the money out of the petty cash fund. You're adding more money to the petty cash fund because you're supposed to give them the money, but they didn't accept it. They said keep the change. So that's a reason why you have an overage, because you're supposed to get rid of that money, but instead it's still sitting in your box. So this is where we're going to take a look at this. So oftentimes, that's why usually at the end of the day, or whenever you decide to either check on your cash register or your petty cash, you usually match up your total receipts, you add them all up, and then you add up the cash that's left in the box, and if it does not equal the total that you began with in your petty cash fund, then that's where you have to either write it off either as a shortage or an overage. So let's go ahead and take a look at this example here. So here is going to be an example for a shortage, okay? So for this example, we originally established a petty cash fund on June 1st. We established it at for $600 in total. Then by June 30th, right after, it's been a month, and we decided to replenish it and reimburse the petty cash fund. We counted up our total receipts, and it came out to be $590. And your petty cash fund is absolutely zeroed out. So here in this case, that's weird. I'm missing $10. So, of course, we're going to journalize and animalize our expenses. And what's going to happen is that because the petty cash fund needs to be reimbursed for the amount that it is originally supposed to be outstanding for, right? Here it's supposed to be $600. So, therefore, we're going to have to write off. The last thing here is that we need to write off that we have a cash shortage, and we need to write a check for the amount of $600. Okay, so that is rule number one, what happens. Now, of course, what's going to happen is obviously whoever is going to be in charge of I keep saying inventory manager, petty cash manager, they are responsible to find out where the heck that $10 went. All right, so they're going to be doing a lot of investigating, because obviously if every single month you're obviously writing a check and there's always a shortage, then someone's doing fraud. Someone's stealing from the petty cash fund. Okay, so or someone's stealing from the cash register. Whatever you want to imply, they're more like the same thing. So again, you're gonna when you do replenish it right then and there, you're just gonna recognize that you have a cash shortage or a cash overage. Okay, so you're gonna create that account. Now again, it's only common again for that you're more likely to have an overage, especially when you're dealing with cash registers. But for this case, that's what happens when you counted your total receipts and it does not match the total that you started out with, and you found a discrepancy. You found that $10 is missing. So what you're going to do is you're going to journalize it as a separate entry for that $10, and you're going to still, no matter what, replenish your petty cash fund for the amount that it's supposed to reflect. You absolutely cannot write a check for lower, or you cannot write a check for $590. The petty cash fund must hold the value of $600, okay, at all times. Okay. Well, then what happens when you have an overage? So again, same scenario here, but different idea. So here, again, on June 1st, we decided that we wanted to establish a petty cash fund at $600. And again, on June 30th, we decided to count up our total receipts. So we have a total receipts of $600, but for some reason, we still have $20 in our petty cash fund. So here, it's either someone they recorded twice, or they decided to just throw money in there. You know, the boss decided to be like, oh, I forgot, I put $20 in there. You know, for any reasons for that, and you decided to count up. So here, my total cash box is at $620 when it needs to be at $600. So what you're going to do is, again, you're going to recognize your cash shortage / overage account, and you're going to realize it's $20. Now, this is exactly where, because of that reason, that's when you can go ahead and write a smaller check, because what you're going to essentially do is you're going to keep that cash shortage / overage into the petty cash fund and keep it there in case you need to use it for any reason. So again, this is where you're going to write a check for lower. You're going to write it for $580. So then your cash box at the end of the day is going to reflect the $600. Okay, so essentially in this case, we're journalizing it in a sense where it's still considered an expense because I have extra cash. So there you go. All right. Any questions for cash overage or cash shortages? No? Okay, chapter 9 review. So, we talked about how to establish a petty cash fund. We talked about how to increase it, and we also talked about how to / decrease / close it out. We also talked about, well, what happens and how do we actually spend the petty cash fund, right? You spend the petty cash fund by having recorded on another ledger, and at the end of the day, when we replenish the petty cash fund is when we actually journalize all our expenses. So, for this test, all I want you to know is to at least establish a petty cash fund and how to replenish it. That's it. I'm not going to test you on shortage or overages. Maybe conceptualize, like I'll ask you a question. If you have this much money and you have this much receipts and your total cash fund is this, what do you have? A shortage or an overage? That's as far as basics for that. But I do need you to be able to know how to journalize, to establish a petty cash fund, and to replenish the cash fund. Okay? Other than that, let's go ahead and get started with our example here. So, Chapter 9, Petty Cash Exercises. So let's go ahead and get started. So number 1, on January 10th, you decided to establish a petty cash fund for a total of $250. Journalize. So how are we going to journalize this?
Petty cash, debit 500 from checking.
Good.
250.
Good. Wait. Okay, so you said 500? No, it's just 250.
Sorry, 250, yeah.
All right, so again, we're going to place the date, so January 10. First thing we're going to do is we're going to recognize our petty cash fund, right? And then we're going to credit our checking. All right, and you're right, for the same amount of $250. Okay? And then let's say number 2, on January 12th, you took $20 from the petty cash fund, okay? And to pay for party supplies, costing $18.57. Journalize this.
Party supplies is expense, 57.
Okay.
And what is the name? Shortage, cash short.
Not really. We're not. Okay, so in this scenario, right, they're all connected, right? If I establish my petty cash fund at $250, so then on January 12th, you decided to take $20 from the petty cash fund to go ahead and pay for the party supplies. How do you journalize this transaction?
So January 12th party supplies expense
Okay.
and debit 20.
Okay. And then where does the 1857 go?
Credit.
Okay, so then where does their extra cash remaining go? Okay. Now, I'm going to ask you this. When do we record our transaction, especially when we are utilizing petty cash? Exactly. So therefore, there is no journal entry here because we don't recognize it until we replenish the petty cash fund.
Right.
Okay, so there you go. All right, on January 31st. Now, you counted a total receipts in the amount of $179.65. Replenish the petty cash fund. So in this case, just go ahead and use cash receipts as your expenses. So how do I journalize this? How do I replenish my petty cash fund? You wouldn't debit your petty cash.
Are you checking?
You would definitely have your checking, but you wouldn't.
And your petty cash.
No. When do we ever use the petty cash fund account? Okay, let's go ahead and take a look at my example here. When do we use the petty cash fund account?
When you're closing.
Either when you close it or when you're establishing it or if you want to increase it. Now, how do I replenish my petty cash fund?
By writing a check.
Okay. And what else?
Write a check for the total amount of receipts.
Correct. So what's the total amount of receipts?
$179.65.
Okay, good. So, again, because I wasn't specific on what my expenses were, right? So, because these are all connected, right? I'm assuming that this $18.57 receipt is included into this January in this total amount of receipts right here. But of course, I didn't give you how many details on what I purchased. So I told you to use the cash receipts, expense, whatever. Okay. And then in order to replenish a petty cash fund, we're gonna count up the total amount of receipts, and we're going to write a check to it, because what essentially happens is we're trading the receipts to add more money back into the pot. Okay, so in this case, this is 179.65, 179.65. So right now, in the lockbox as of January 31st, you have a total receipts of $179.65, and whatever amount it equals to 250. That's the cash remaining. Now, of course, in order to replenish it, we need to add up the total receipts and give back the money. So the petty cash fund still holds its value of $250. Okay, so it's a little confusing. So let's go ahead and let's continue on. Okay, so assume that questions 4 through 6 are not related to the previous question. Okay, so here on February 1st, okay, you decided to establish your petty cash fund for $500. Yes. So in this case, we are going to February 1st. This is where it's okay to use the petty cash fund account, okay? Because we're establishing it. And what was it for? Oh no, what was the amount for? 500.
500. Yep.
Okay. So this is us establishing it. Okay. Now let's go ahead and see what happened here. So then again, on February 15, at the end of the day, you counted a total of $156 of cash receipts, and then a total of $344 in cash remaining in the cash register. So in this case, how do we replenish this cash register? Did I say cat? Oh, no. Okay, so sorry, excuse me. We decided to establish a cash register for $500. So here, we're taking a look at how this cash register is going to be. So it's not petty cash, I'm sorry. This is supposed to be cash register. Right? This is a perfect example, right? We're establishing a cash register. So your store needs to have cash in the cash register, am I right? You need to be able to exchange money with your customers. So in this case, I'm having a cash register hold a total of $500. All right? And then at the end of the day, right, you have a total receipts of $156 and a total cash of $344 in cash remaining in your box. So, how do you replenish the cash register?
$156 of cash receipts. So gotta check
You write a check,
for 156.
okay?
That's to make up the difference to bring up your amount to 500.
Correct. That's exactly what this is. So again, you're not going to be debiting your cash register, because your cash register should hold the total value of $500. Right now, it doesn't have $500. It has $344. So how are you going to add back that money back in there to also validate that you had a total transactions of $156, because you have the receipts to prove that that's what's supposed to happen, that your box is in total for $500, but you only have $344 in cash. So what you're doing is here you're trading your cash receipts, your in this case sales receipts, And so I'm going to go ahead and write sales receipts. And when you trade in your sales receipts in, you're trading them in for cash. So now the person is going to take that check and they're going to cash it out and put it back into the cash register. So that means the cash register is going to start off again at $500. All right. Is this kind of more clear?
Yeah, it's getting there.
Okay. Yes. All right. And then let's see what happened here. Then on February 28, you decided to switch from a cash register to a credit card only transactions. Okay, so journalize the closing of the cash register.
Checking debit.
Checking debit, good.
And then
Cash
cash
register.
register.
Good. All right. Essentially, what are you gonna do if you're closing out your cash register? What are you gonna do with the money? You should put it into your checking account. And for how much am I going to put it in? If we established it originally at $500,
500.
we're going to close it out at $500. We're not going to leave anything behind. So therefore, we're getting rid of the cash register. So the cash register is supposed to hold $500. Now it's gone, completely eliminated. So the chapter 9 review, there's another example in there that's a little better than this one. Okay. And then last but not least, okay, if you establish a petty cash fund for $200 at the end of the month, you calculated the total of receipts to be $155.20 and a total cash to be $50. You have a blank in the petty cash fund.
You have a shortage.
Let's calculate that again. There you go. You have an overage because you add them together and you find out that you have 205. So you actually have an overage. You have too much money in your account. Okay. Now again, say that again.
I said there are worse problems to have, I guess. Too much money in your account.
Yeah, like I said, when it's very common when stores that have cash registers, right? A lot of customers say just keep the change, so that when they add up the total amount, they actually have more money than they should. So yeah, of course it's a problem, right? All right, if you if you establish a petty cash fund for $200 and at the end of the month, you calculated a total receipts to be $150.54 and a total cash of $24.46. You have a blank in your petty cash fund.
Here you have a shortage.
You have a shortage, yes, you do. And this one's a pretty more obvious one, right? If you add 150 to 24, that's only 174. So you're missing quite a few dollars here. So again, there's many reasons why that can happen, and we talked about those reasons. So other than that, that is it for today. All right. So again, chapter 9 review has a better example of this. Yeah. Okay. All right. So if you don't have any other extra questions, like I said, for the test, I'm only going to test you on how to establish a